Good afternoon, traders. This is Christian from Market Trade Group, and it is Thursday, September 15th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. So I don't even have a theme of the day in here, but it's really when we have, not only option expiration weeks, but we also have quadruple witching. Things can really kind of get whippy. They can get dicey. So whippy price action. I had a couple questions earlier today regarding, hey, well, what's the best way to kind of prepare for quadruple witching when you've got all these things going on? And unfortunately, I don't have my answer is very simple, but it's not anything, it's not anything fun or an interesting trade idea, which I usually have. But at these times, what I've realized is that you just don't have a lot of edge in this market. So the answer to that question is, just to kind of do things that we've been talking about now for a while, which is just dial down your risk. Try not to really go crazy trying to trade this market. And I'll show you my trade blotter in just a second, but right, which is right here. I was looking at a couple setups, and it's frustrating. I would say when you start to see things and your setups and things, because that's basically what I try to do is regardless of like a lot of things that are going on in the market, if I'm seeing good setups, I'm going to try some different things. So I wanted to go through, and some of them they're not going to work, right? You're going to see a lot of price action one way and then just no follow through. And and that's also trading in bear markets, which is what we have too. So unfortunately, and that's why I'll try to keep this video short because I don't want to waste your time, but you just kind of have to be patient. We've got a Fed meeting next week too. So these days, since we had that CPI report, there really hasn't been something that's really going to kind of change the tone. And that's kind of a little bit of the depressing thing about the CPI report too, is that we've got to wait for more data that comes out that is going to confirm to us that the inflation is going down. And again, I hate to talk so much about the inflation, but it's a lot of us traders do use the term "don't fight the Fed," right? From Marty Swig. I do believe in that. And if they're sucking out liquidity of the market, right, and they're tightening, you're going to get a lot of things. You're going to get a lot of situations where you get the false breakouts or even just false moves, right? The travel stocks were looking pretty good. The casinos were looking pretty good early, right? And I still think there's a couple of them that I'm going to be paying attention to. Nice volume on this Las Vegas Sands. This does break the range, and also how this market has been going is you'll get, this is the first 15 minutes of the day, right? And that's it for the move, right? So if you don't catch it, right out of the gate in the first couple minutes, some people like to wait. We talk about this from time to time, waiting sometimes for the first 15 minutes of the day to go by to see how the day's progressing. I laugh because some of these moves, if you wait 15 minutes, you miss the whole move because so it's kind of difficult. I think really trying to have conviction is the important thing so that you don't get shaken out, but you got to figure the right position size too, because things can reverse. This group was, here's another example, right? This is a name that I talked about. Yesterday's video didn't go through, but this was a name that I was talking about yesterday as having some potential, right? Like the commercial, you have potential. But this one, again, just it didn't have the oomph to really do anything special today. So this is the 1 hour chart. Here's the 5 minute, which again moved outside of the value area till about 10:20 was the high of the day. Had a little bit of a fight back to it, but I tried this. I traded this yesterday too. And you could see, like, I got one quick target off in this one at 10 o'clock. And, and then it just looked too weak. And I just kind of gave up. But you could see, I really didn't do any trading for the rest of the day. So again, these are things that while they're not exciting, things that I just kind of learned, if the day is just too tricky, you're just going to end up, banging your head against a wall or the desk with frustration, because it's tough. So why don't we look at a couple other, I wanted to give a couple examples and show you my trades and show you that, I think it's a very difficult market. But let's talk about a few of the technicals to kind of watch in the major indices at this point, right? So yesterday was a weird day because it looked like the market was going to break yesterday. And every time it approached the lows of the day yesterday, it bounced. So today was a little bit different. One thing that I would bring your attention to here is notice, I'm highlighting the 5-period moving average. I'm highlighting the 20-day moving average. I'm highlighting the 50-day moving average. Notice that price is back below these, right? And, even yesterday with a little bit of a rally at the end of the day, we didn't take back any ground. So we're kind of stuck right now back in no man's land. We're just above the highs from 9.6, 9.7, whichever one made the I guess 9.7 made the low of the month. But we're getting very close to that in the S&P, and we have no turn here. So the direction right now is down. Now we have some support, right? We're still inside the value area for the week, right? So again, how this works, by the way, I've tweeted this out because sometimes I don't give all the explanation in these videos because the videos would just be too long. But on the daily chart, right? Well, let's start with the weekly chart. And this is also revealing too, right? We try to go back inside the value area for the year. So on the weekly chart, you get a value area for the whole year, right? Which is based on last year's price and volume, right? But you could see that this 40.71 is kind of a significant level, right? We broke back down below this, try to get back inside, and that looks like a failure for now. Now, again, there's one more day of the week and anything could happen, but it looks like that's a failure at what's most significant, which is the weekly, the yearly value area, right? So that's what we have here, and that's 40.71. The daily chart, you have a value area for every month, right? So this is the September value area, which is based on the August price action. So again, you get little bits of hints about what price is doing and where there might be a threshold of support, resistance that you can kind of watch and pay attention to. So that's where I would be watching. And again, we only have one more day of this week, but we haven't breached this 38.96. Now the direction is going that way, right? And this was the 1 hour VPOC right before the right before the CPI data. That also, and this is, by the way, I did send that out earlier in the week. I said, hey, this would be a great place to take some money off the table, and you might see I said that you might see some digestion at that version point of control. Well, obviously, sometimes the VPOCs can be a reversal, right? And you got that. Again, not every single time, but you can see that. And certainly with the one on the NASDAQ too, perfectly, right? Rallied all the way up to this overhead supply and went lower. All right, so let's do the same exercise. All right, so weekly, right, we're back out right now. We're going to close back outside, and that's a bearish engulfing candle for the week almost. I like to say that I like to use the bodies of the candles, but the true definition is if the wick is outside, so we're close. We're very close. So if we get a down day tomorrow, that should give you a bearish engulfing bar for the week, right? And this is closer, right? So this has been weaker, right? And we're very close to taking out that 9.7 low. Very tricky, because the market started to kind of, is the 5-minute for the Qs, right? We started to, and by the way, when we rallied back, right? So I stopped with the time frames. I'm on the 5-minute right now. And you get every day you get a different value area, which is based on the previous day's activity, right? So one day value area is based on, just get the value area for the day. But you can see when we rallied up, right? This is what's important too. So even though we've got a lot of things going on with this quadruple witching, and you know, there's not only the option expiration, but the S&P and the NASDAQ rebalances and all of the indices in there. So that is why it's very difficult to anticipate what some of this index flow is going to be. But at least you have the roadmap, right? And 12,146, you know, that was a really strong volume bar. Look at the volume on this, right? So as we said, that you're going to see some buy programs, some sell programs, and looks like FedEx is withdrawing their data. I'm just going to throw this in the room. All right, I just had to throw that in the room. But so yeah, I mean, you could see this big volume bar and notice how there's just nothing behind it. Once you hit that resistance, you know, that was it. And then, you know, we kind of just trickle down, you know, and again, this is very difficult because you're thinking, okay, you know, we're really breaking support for the day, right? And then we do a 180 back here. So again, that's what's very tricky about these quadruple witching weeks. They're you know, as I've said this word a couple of times now in this video, but it's just very whippy price action. Regardless, right? Watch this S2 11,915, right? So that's right around where we were last week. And if we break that, then I think we're headed down to 11,694, and that'll be a new pivot. You know, possibly because we were kind of holding this. So that's the story. And you kind of have to think about the next couple of days. You have to think about the Fed meeting is going to be on Wednesday, right? That's, you know, the CPI was probably one of the most widely watched economic statistic ever, from what I understand. You know, and the price action after an economic statistic was, I think, the biggest. So, you know, what do you think is going to happen come Wednesday, right, for the Fed meeting? It's going to be a similar type of event. Everybody's going to be listening or hanging on every syllable that Powell says, and probably not, you know, a lot of risk that people want to take until then. All right. So it's a very difficult situation to be trading when you know that you're probably going to have a little bit of short covering go on one day. You're probably going to have shorts reassert themselves one day, right? And meanwhile, the longs are probably going to be pretty light into you know, going into the next couple days. I just wanted to share with you too, because the video, you know, we talked about, I have a short in Meta and Facebook, right? This is broken. You know, my target is basically down here ultimately. Now I know that's a long ways away. I've been taking a couple like profit targets, but I did add back, you know, and I think like this is working right now, right? You know, basically adding some strength. You know, I added Facebook. That was the first thing that I did was, you know, I took a couple targets in this already. So I reshorted some Facebook at 151. Stock actually went up a couple bucks from there. But I kind of stayed with it. I have some conviction in the trade, you know, and then was able to take some of that ad off today. Right. So, you know, a couple other things, right? Adobe. I mean, again, it's a lot of bad news. Adobe closed all the way down at 306, right? So you got to think, right? Who is this affecting, right? Well, you know, you look at Microsoft and where Microsoft could be headed down to, right? I think, you know, 237, right? And we'll see what happens when we get to the bottom of value. Again, even though it's going to look like this is a breakdown, right? This is the support based on last year's volume at price. So I think 237 is going to be very interesting when we get there. And if you look at Google, right? Google is also that on the weekly chart looks definitely to me like a short opportunity. So there's some opportunity, you know, there's ways to kind of think about playing this market a little bit. You know, being short a couple of these FANG stocks, right, which have we know that the FANG stocks, and I hate to break it to people because I've been talking about this till I'm blue in the face, but these are not your market leaders anymore, right? Another football analogy that I gave a couple of days ago that people liked was, hey, I liked, you know, I grew up in the 80s and in the 90s, right? And you know, the 49ers were the team of the 80s, right? They were the leader, right, in football in the 80s. But you know what? they lost that leadership, right? And they stopped being, once you got into the mid 90s, right? They won one more Super Bowl. I think it was 96, 97, something like that. And then that's it. They lost their leadership. Same thing with the Cowboys. Remember how many Super Bowls did the Cowboys win in the 90s? I think it was 4. If I'm wrong with that, it's either 3 or 4. I'm sorry, I'm forgetting. But the point that I'm trying to make is things change. Leadership changes, right? Just like, and again, I know sports is not exactly like trading, but there's a lot of, I like to use these analogies, especially since football just started, but you have to be able to kind of change with that, right? So if you're a betting person, and you were going with the Cowboys, right? Even like forget about the point spread, right? You're just picking the Cowboys to win, right? Something changed, right? In their team, right? And you can't keep betting on the same team, regardless of if you're a fan or because the leadership changes, right? And you don't have leadership with these names anymore. I hate to say it, but that's the situation that we've been talking about now for some time. Google looks like a short. And, the other way that you could kind of think about this market too, Tesla's been holding up very well, right? Even on a day like today, now Tesla, I think has to break. I was really paying close attention to this today, but it didn't close where I needed it to, which is 306.43. But that could be a trade. Maybe you go long Tesla and you go short Google, right? Or long Tesla and a short Facebook, right? That's one way to extract some value out of the market if Tesla continues to do what it's doing, and at least like even if Tesla goes flat and those two other names go down, right, you're still going to extract some value in there. So that's just one way that I think you can take advantage of the situation. I also added some Ulta today. I was flirting around with whether or not I was going to take this off, but I like these setups, right? I like the breakout. And now you've got basically it did close inside value, but it's right at the 20-day moving average. So we'll see if it hangs on. But I looked at what ELF did yesterday, right? And ELF was almost up again today, but very, very strong. And Ulta had great earnings, right? So I would think if a name is going to bounce, it's again, I stick to the names that had good earnings, right? And I'll be watching for a possible bounce in this tomorrow. All right, guys, that's it. Like I said, I'd keep the video kind of short today. Have a great night, everybody, and I'll see you tomorrow.